So I see professional investors on Wall Street, as well as analysts on these media outlets and gurus on YouTube and other social channels talk about making a buy or sell decision based on the P to E ratio. Well, in this case, I'm going to talk about why the P to E ratio is misleading. Let's dive in. So let's get right to it. This is a quote from investopedia.com. It's a great site for learning about investing and learning different investing terms. So they said, it's tempting to think it's a foolproof tool for making wise stock investment choices. Think again, the P/E ratio is not always reliable. There are plenty of reasons to be wary of the P to E based stock valuations. So there are really two reasons why the P to E is misleading. First, a high or low P to E ratio can be good or bad. And second, there's not enough data points. So let's jump into the high and low a little bit further. So a high P/E may indicate that investors expect higher earnings and therefore the share price will rise. On the other hand, a high P/E ratio may also indicate the stock is overvalued. So if the P/E ratio is high, it can be good or bad. Let's jump to that low P/E. A low P/E may indicate that the stock has low earnings and the share price will fall. On the other hand, a low P/E ratio may also indicate the stock is undervalued. So same situation, if there's a low P/E, it can be good or bad. Now let's jump to that second point. So with the P/E ratio, you have share price divided by EPS. It's two numbers. Tykr uses over 50 numbers to make a decision. Now I want to pause here and jump to a movie, Moneyball. This is a great story of using mathematics to win baseball games. One of my favorite sports movies all time. Brad Pitt, Jonah Hill. And there's a particular scene in the movie when Brad Pitt's sitting in the boardroom and there's these older scouts just going on about their criteria for making investment decisions in players. Some of those points include, is the player good looking or not? Is their girlfriend good looking or not? How do they throw the ball? How do they swing the bat? How does the ball sound when it pops off the bat? None of these things matter. And then Jonah Hill's character in the movie, he's the economics expert from Yale University who brings math into the equation and really boils everything down to getting on base. The more times you can get on base, the more potential runs you can score and the more potential games you can win. Well, what ended up happening is the Oakland A's in 2002 won 20 games in a row, which broke the league record, and then they won 103 games total. Totally flipped the game on its head. And the whole criteria of looking at these stupid ways to analyze players went out the window, and we boiled everything down to math. So when we jump back to investing, the P/E ratio being those two numbers, it's not enough data to make a logical decision. So let's jump into Tykr a little bit. If you are interested, you can go to Tykr.com. You can go to the education tab and there's a little drop down that says calculations, and Tykr is open source. We want to be totally transparent, and we even say that if you really want to, you can go create your own version of Tykr, but hopefully you decide to stay with us. But you can take the math and put it into Excel, but this is essentially how Tykr works and why we look at more than just two numbers. So we look at the three financial statements. You have the income statement, cash flow statement, and balance sheet. On the income statement, we look at the revenue, net income, and EPS. And what we do is we look at the growth year over year and quarter over quarter over 5 years. Then we jump to that income statement and we look at the free cash flow line. And same situation, we want to see the numbers increasing year over year and quarter over 5 years. And then we jump to that last statement, which is the balance sheet. And we want to see the assets and equity increasing year over year and quarter over quarter. Then we want to see liabilities and debts decreasing year over year and quarter over quarter. Now you can do all of this in Excel. Forewarning, it is very manual. This is how I originally did this with Tykr way back in the day when it was just in Excel. But using Tykr can save you a ton of time. But at the end of the day, over 50 data points gives us a lot more rigor to make a logical decision if this is a strong business or weak business. When you go back to that P/E ratio, again, you have the two issues, a high or low, it can be good or bad. And two, the two data points, it's not enough. It's not enough rigor to make a logical decision. So the next time somebody talks about making a buy or sell decision based on the PD ratio, you can tell them what you learned here, or you can send them the video. If you like this video, go ahead and hit that like button. If you want to see more like it, hit that subscribe button. And if you want to learn more about investing, go ahead and check out Tykr.com. All right, we'll see you in the next video. Bye for now.